Hello. Welcome to my channel, my dear friends. My name is Avilash and I'm a trader next door. In this video, I'll be analyzing the chart of gold USD. So if you're watching my videos for the first time, you can subscribe to my channel for regular market analysis. So let's get started. My dear friends, right after the market opening, we got to see some good moves in the market. That's why you all have heard me saying that volatility will play a big role, volatility is a deciding factor, etc. Because volatility of the market really plays a big role, and today is one of the best example in front of us. Usually Monday markets are silent. We do not get to see much action during the first half of Monday. More or less market shows momentum by the US session, but yes, there are some rare occasions when market shows craziness. That's why I clearly told on the video of Saturday that there may be some developments in during the weekend and we must be very careful. And we can see that there's a news that gold falls further pullback likely. Gold prices are lower in early Asian trade. Analysts broadly point to potential for further pullback in the precious metal on recent hawkish signals from the Fed. And after crude prices jumped on Saudi-led oil producers' decision, yes, oil is playing a big role here to lower output, which could push up inflation in the US. Means there is a possibility that inflation will be higher in USA, and as a result, there will be aggressive monetary tightening. So there will be some interest rate hike. As a result, DXY is going up right now. If inflation is up, then Fed will also increase interest rates, and it means that DXY will be up. If DXY is up, then obviously gold will be down. And now you can see that gold is standing at 1951 level. Okay, and we discussed about two levels on the chart of gold on Saturday. The first level was 1964 to 1964 to 1962. 1962 tried to provide some support, but the level did not work, and right now we can see that gold is standing at 1951. And if this is the condition of the market, then there's a possibility that market will go down further, because you can see that though we have support levels or buyers present around these levels, but the volatility will decide everything. If this volatility remains in the market, then obviously these levels will not be able to hold the market. So first level that in front of us is around 1950 to 1949. And right now the things are not very positive, so as a result there's a high chance that market will break 1950 to 49 as well. Okay, the market has just opened a couple of hours ago, so what you can do is you can simply switch to 1 hour time frame and wait for the market to bounce. Okay, so the best support right now in front of us is around 1934 to 1935 level. Okay, 1934 to 1935 is the only reliable support where you can expect the market to give you a proper bounce, where you can expect you can the market to take some support, to take a pause. And in this condition, there is a good chance that market will break everything and go down. You may get a minor bounce around 1945 level. Okay, I mentioned on Saturday about this level. Around 1945 you can get a minor bounce, minor pullback of let's say 40 pips, 50 pips. Okay, but in this market condition, because of the news, further downside is very much possible. If we look at the chart of DXY, then you can see that DXY is extremely bullish right now because of the ongoing market sentiment. Okay, and the next resistance on DXY is around 103.33. But is this a proper resistance where we can expect a trend reversal? No. Okay, because these are not proper resistances, these are just previous highs of the market. Okay, so as a result, you need to be extra careful this time. If you already have a sell position in the market, okay, if you already have a sell position in the market, be on the trade. If you have a buy position, you can wait for some time, because I think that at one point market will try to reverse and you can exit from your buy positions. Overall, the sentiment is not very positive for gold right now. You can see that market is out of the symmetrical triangle pattern here. Okay. Symmetrical triangle is a bilateral pattern. and market is going down. So, and because of the market sentiment, further downside is also very much possible. So keep your eyes on 1934-35 level. I think market will take some support, but keep in mind that no level is permanent in the market. So as a result, you can switch to 1 hour time frame or 15 minutes time frame, 30 minutes time frame, and just wait for the market to bounce. If you see market taking support, if you see market bouncing, if you see market showing price rejection from below, then only you should go for a buy position around 1935 level. See, and you can see here we talked about this level here, 1962 level. As you can see here, market showed price rejection from below. Okay, price rejection from market tried to take support, but the selling pressure was high. As a result, the level failed. Our analysis was not bad, but level still failed. This is the main reason why 100% accuracy is not possible in the market. This is the main reason why no trader, okay, not even Warren Buffett, is 100% accurate in the market, because market is above all. Okay, so as a result, risk management is extremely important. Follow proper risk management. Do not gamble with your hard-earned money. If you're unable to understand the present market, then you can lower down your lot size, okay, and trade accordingly. But please be careful. Okay, personally, I will just wait for 1934-35 level. I have already set alert around 1938 level so that I can sit in front of the screen once market reaches 38-37 level, and I can decide accordingly whether I should be going for buy at 34-35 or not. So this is all about the market. There are minor supports. Market is approaching minor supports, but in this market situation, chances are very less that market will be bouncing from the minor supports. Okay, so let's wait and watch. If possible, I'll try to post an update by the US session so that, okay, we can understand in which direction we should be placing our trades next. Friends, if you look at the sentiment meter, then we can see that the retail traders, okay, the retail traders are not having a clear direction regarding the goal right now. You can see 52% are on the sell side and 47% are on the buy side. So retail traders are also confused regarding the next direction of goal. If we look at the COT data, here is a goal. You can see the non-commercial, okay, the non-commercial, okay, the number of long contracts are 2,45,135, whereas short contracts are 63,505. So there's a huge difference between long contracts and short contracts. And there's a possibility that after some discount, okay, there may be some further upside on the chart of gold because of the huge difference between the long contracts and the short contracts. This is my opinion. I can be wrong as well. Please write down in the comment section what you feel about the market. Bye bye, take care.